Welcome to tonight's special presentation. My name is Brian D'Amico, and tonight we'll look at the best income trade you never knew existed. Next week is Halloween, and I remember as a kid coming home from a night of trick-or-treating and dumping out the candy on the living room floor with my brother and sister. We'd make piles of our favorite candies, our least favorite, and then there'd always be this pile of unknown candy. I was a little scared of the unknown candies. I'd pick it up, unwrap it a little bit, sniff it, and if it kind of smelled okay, I'd take a little bite. And sometimes I'd come across the best tasting candy that I never knew existed. What does candy have to do with investing? Well, tonight I'll teach you an income trade you'll feel the same way about. At first it might be a little unknown. You may be a little scared of it at first, but what we'll do is we'll unwrap it slowly so you can understand it. You know, give it that little sniff test. When we're done, I hope you'll decide to take a little nibble of it and try it for yourself. I think it'll be the best income trade you never knew existed. Let's get to it. Income trades. Why are they so important to you? I'm guessing you have recurring bills, right? A mortgage, a cell phone, a car payment, or maybe you've got a car payment. And you might be worried that when you retire, you won't have enough income. You might even be in that position right now. If so, you're watching the right video. The trade you'll learn tonight can be done when the market's going up, when the market's going down, and when the market is going sideways. It'll provide a steady source of income for you all year long. And best of all, anyone can do it. You might be thinking, me? Yes, you. I taught my 14-year-old daughter this trade, and if she can do it, yes, you can too. Here are some of the benefits of this trade. It has less risk than buying stock. Less margin is required to place the trade, which means both small and large size accounts can do these trades. And best of all, when you place these trades, you find you have 70 to 90% winning trades. Oh, did I mention? It's an option trade. Wait, Brian, you had me until you said it was an option trade. Aren't options risky, complicated, and aren't they only for professionals who know what they're doing? Well, no, and no. And you'll see that tonight. Here are tonight's objectives. First, I'll help you understand the trade. Even if you've never traded options, you'll be okay. I'll draw it out for you and walk you through it one step at a time. Second, we'll walk through specific examples to help turn a possible abstract concept into something more concrete. After that, we'll look at a couple of case studies of actual trades. And when we're all done, I'll provide you with a checklist you can use and action items for you to do right away. Sound good? All right. I like to teach in a way I call adding layers to a knowledge sandwich, which means we'll do it one layer at a time. First, a typical trade is one where you only make money if you're right. These are trades you do virtually all the time, such as buying shares of stock. However, an income trade is one where you can make money whether you're right or wrong on direction. How is that possible? How can you make money if you're right or wrong? Here's what a typical trade looks like. You find a stock that you like, hopefully one that's already going up in price, and you buy it. Well, after you buy it, if it goes down, well, that's not good. If it goes sideways, well, that's not good either. The only way you make money is if it goes up. This is what your income trades will look like. You'll still find a good stock that you like that's going up in price. Instead of buying it, you're just going to pick a price where you don't think the price will drop to. For example, down here. How do you make money? Well, I'm glad you asked. For now, just understand you're selling an option. Don't get hung up on all the back-end stuff. Remember, this is just one layer of your knowledge sandwich. For now, just understand you're getting paid upfront for selling this option, and as long as the stock stays above this price, you make money. So if it goes up, you make money. If it goes sideways, you make money, and it can even come down a little bit and you could still make money. Guess what? You can even do an income trade when the market and a stock are moving down. You would just flip it over. You find a bad stock that's going down in price that you think is going to continue to fall. You pick a price where you don't think the price will rise to, for example, maybe up here, and you get paid up front for doing that, and as long as it remains below that line, you make money. Cool stuff, right? Ready for layer 2 of the knowledge sandwich? Okay. The specific type of income trade we're talking about is called a credit spread. There are two types of credit spreads we'll use for income trades. One is called a bull put credit spread, and one is called a bear call credit spread. Tonight we'll look at both, so let's get started with the bull put credit spread. Let's break it down by looking at each word. Bull, put, credit, spread. First, the word bull. That lets you know it's a bullish trade, and you should place this trade when both the market and the stock are in an uptrend. Second, the word put. This lets you know this trade only involves puts. You'll be selling a put and buying a put, and we'll talk more about that in a moment. Third is the word credit. That lets you know you will be getting paid up front. And lastly is the word spread. That's just the difference between the strike prices we're going to use of the puts. Remember, we sell one and we buy one. The spread is the difference between the two, which is our built-in risk management for this trade, and we'll talk about that more in a bit. All right, remember, we start with a good stock that's going up, and we pick a price where we don't think the stock will drop to. For example, down here. That's the put we sell. And when you sell something, you get paid. So let's just denote that with a couple of dollar signs here. So 1, 2. So we get paid for selling that put. And you might be thinking, but when I sell a put, isn't that a lot of risk? I thought this was a low risk trade. Well, you're exactly right. That's why we buy a put a little bit below that one as our insurance policy. When you buy something, it costs something. So you're going to use some of the money that you took in to pay for this put down here. But you're not going to use all of it, so it still leaves you with a net credit, which is good. By the way, both of these trades are done as one trade with your broker. For you, the mechanics are just as easy as buying a stock. Well, let's add another layer to our knowledge sandwich by looking at a real example. Here's Costco. Nice looking chart, right? The market was also in an uptrend at the time. Costco was trading at $207.98. If you bought 100 shares of Costco, it would cost you $20,798. And the only way you make money is if Costco goes up. Also, you have over $20,000 of your capital tied up in this trade, which also means you have over $20,000 at risk. Okay, what if you just sold one put? Remember, you start by picking a price where you don't think the stock will go. So let's say you sell a 205 put. By selling that put, you receive $246 per contract. But you still have over $20,000 of your capital tied up and at risk, because just selling a put means the broker will require you to have enough margin to buy 100 shares of Costco at $205 a share at expiration. But don't worry, you will never ever hold these trades until expiration, so don't worry about that. Well, instead of just selling a put by itself, we want to make this a low risk trade. To do that, we'll sell our bull put spread. Simply buy a put a little below the one we sold, let's say at the $200 strike. This is our insurance policy. Now, just like any insurance, this costs some money. In this example, it costs $121 per contract. But that's okay, because we'll just use some of the $246 that we collected to pay for it. And remember, both of those trades are done at the same time with your broker as one trade. By selling a bull put spread, you generated $125 per contract, and it lowers your max risk on this trade all the way down to $375. Instead of over $20,000 at risk, it's down to $375. Of course, you could increase the income potential of this trade by selling more contracts. For example, 10 contracts would generate $1,250. And your max risk is still only $3,750. Let's look at a case study. This was actually a trade we and our clients placed. Notice the trade was placed on this day here, and Costco initially went up, then dropped for 6 straight days, and then rebounded for a few days. At the end of the day, it only rose 1.4%. But this credit spread returned 16% in 2.5 weeks. One of our members, Frank, let us know he took profits on the Costco trade at the predefined level, and he netted $955. Remember, one of the great things about this trade is that it can be done in both up and down markets. Let's look at the trade you'll use in down markets, the bear call credit spread. Again, let's just break it down by looking at each word: bear, call, credit, spread. First, the word bear. That lets you know that it's a bearish trade, and you should place this trade when both the market and the stock are in a downtrend. Second, the word call. That lets you know that this trade only uses calls. You'll be selling a call and buying a call. Third, the word credit, and just like before, it lets you know that you will be getting paid up front. And the word spread, that again is the difference between the two strike prices. It's our built-in risk management for the trade. Instead of drawing it out, let's go right to an example. Here's Facebook. Facebook was trading at 157.25. The market and the stock are both in a downtrend. At this point, you just determine where Facebook is not likely to go. Based on probability, it most likely won't rise above $165. So that's where you will sell your call. When you sell that call, you'll receive $455 per contract. Well, we want to turn this again into a low-risk trade, so we're going to do our bear call spread. Just in case the trade goes against you, you buy a call above that as insurance, let's say at $170 strike. And this costs you $310 per contract. Again, remember, it's all done as one trade, and you generated a net credit of $145 per contract, and your max risk is only $355. Once again, you could sell more contracts. For example, 10 contracts would generate $1,450, and your max risk is only $3,550. But let's look at a case study of what actually happened in this trade. So here's Facebook, and here's the day that we placed the trade. Facebook actually dropped 7% over the next 2.5 weeks. And in that time, the credit spread that you placed returned 20% on the money that you risked. Okay, so what are your action steps to help you begin to unlock an income stream for yourself? To successfully place credit spreads, you need to follow a system. And I put together this checklist to help you. First, determine the market direction. Have a signal that tells you whether the market's in an uptrend or a downtrend. Second, select a stock. If it's a bullish trade, select a rising stock with good fundamentals. If it's a bearish trade, select a falling stock with poor fundamentals. Third, you want to set up the trade. One main question to ask yourself is, where is the stock not likely to go? After that, plan out the trade. You'll want to plan ahead to take profits at 50% of the initial credit, but also know you may want to adjust the trade if it does go against you, and you'll want to exit the trade once it hits the strike price of the one you sold. Once you do that, enter the trade with your broker and manage it according to your plan. If you want to get results fast, the absolute best thing you can do is register for our Options Paycheck course. Hands down, this is the best course to help you install an income system. In a matter of 7 weeks, you will have a complete A to Z system so you can generate at least 3% per month on average. I'm confident to say that because we see comments like this all the time. Jan says, I'm particularly impressed with the Options Paycheck course. I've profited significantly even during training. I've been trading only the SPX credit spreads this year because I don't have the time or inclination to sit in front of the computer all day. Ron Wheeler has been a fantastic trainer and helped me generate over $60,000 of profit this year trading the Options Paycheck way. This is the easiest and simplest money-generating project I've ever come across with so small a risk. A couple months ago, after Elmer finished the Paycheck course, he posted this. He said, I'm a happy camper. 5 option trades closed so far this month, all winners, 1 requiring an adjustment, for a little over twice what I paid for the course. 4 trades are still open. Then about a week later, he gave an update. He said his bull put on Amazon that he entered just the day before hit its profit target and closed while he was shopping at Harbor Freight. All of this was taught to him in the course. How to find these trades, how to adjust them if needed, how to enter them with the broker so that if he hits the profit target, the trade will close automatically, even if he's out shopping. Just 3 weeks ago, Leonard told us about one of his trades. It's a trade called an iron condor, which combines the bull put and the bear call into one trade, and he learned it in the course. He said after 11 days, the SPX iron condor exit order executed profitably today. I love how he says, just follow the rules, and that's super important. He learned the exact step-by-step rules in the course. And John just posted this a few days ago after finishing the course. He said he finally made his first real trade, and it closed for a $370 gain. He went on to say, this is a real and great system, and one of the very few on the market that is not a scam, and it works great. The course itself is 7 modules, delivered 1 week at a time. We start by building a strong foundation in options, and the techniques you need to know to be successful. The next 2 modules teach you all the ins and outs of the trades that you'll use to generate income. After that, you'll learn exactly how to find the right stocks for your trades. Once you have a small list of stocks, in Module 5, you'll learn exactly which of those stocks make the best option candidates and exactly how to set up the option trade to give you the highest probability for success. And then in Module 6, we'll teach you how to manage the trade. That way you don't freeze like a deer staring in the headlights. You'll know exactly when to take profits, exactly when and how to adjust a trade to minimize losses, and exactly when to exit a trade. You'll never be in limbo in a trade ever again. Then in Module 7, we'll show you everything you need to know to enter the trades with your broker. It really is a complete A to Z system with checklists for everything. In addition to the course, you get live sessions with us as well. To help you actually implement the things that you learn in the course, you're getting 7 live mastery support sessions. These are designed to help you actually implement the things that you learn in the course. So we'll take a look at the things that you're doing and the questions that you have, and we're going to guide you along the way. And if you can't make any live session, don't worry, it's no problem. First and foremost, everything is recorded. But you'll also be able to submit your questions ahead of time via email and via a private Facebook group, and you can get help that way. Speaking of the private Facebook group, once you join, as an added bonus, you'll be invited to join our private Facebook community purely dedicated to the students who are in this course. It's a great support system of other motivated investors just like yourself, so you can bounce ideas, ask questions, ask us questions, and we'll be able to be in there and guide you. You'll also be pre-registered into our members-only group coaching program, which we call the Ultimate Retirement Solution Group Coaching Program. So you'll be able to join those additional coaching sessions as well. You'll hear our main options income coach, Ron Wheeler, and our retirement manager, Jim Penna, give weekly trade recommendations, market guidance, and trade help and coaching during those sessions. So here's what I think you should do. Give us these 7 weeks, and we'll teach you how to install an income system. Even if you've never had success with options before, we're going to do this together. So to join us and have us take you by the hand and help you install this options income system in your portfolio, you can do it for only $995. Simply go to optionspaycheck.com. Registration does close soon, but to put you at ease a little bit, we offer a 100% money-back guarantee. You can actually go through the entire course, watch every module, do all the homework, do everything, get all the training. And if you're not satisfied that we taught you how to install an income system, you can get all your money back. It is completely no risk. But you actually have to do the work. You have to watch the sessions, do the work, because we know if you do, you will see results. Just ask yourself, how much is it costing you not to do this? How much time and energy will you spend trying to do it on your own? How much money are you going to miss out on if you don't install this income system? And then just ask yourself how your life would be different if you do it and it works. Just a couple more quick notes from students who just finished the course. Wahid says, well, the Paycheck course was well worth it. I just calculated my profits so far, and they've paid for the course at least 6 times over. And Tom replied right below that. He said, right? I'm right there with you. Tim wrote in and he said, I just closed out on my Amazon bull put spread with a 50% win. 4 out of 5 trades were winners. I've paid for my class 2 times over. And you can see below that, Frank says, nice, I closed that yesterday and the Apple today. Again, go to optionspaycheck.com, get started today for only $995. Get yourself registered now before registration closes on Tuesday. Now is your chance to get yourself ready for next year. And not only next year, but set yourself up with an income system you'll use for the rest of your life. Take a step towards financial freedom, and we'll see you in the Paycheck course.